Hello everyone, welcome to another week of the Australian Real Estate News Weekly Highlight. I'm Peter. I'm bringing you this video from our new office in Chatswood, and we are going to a grand opening in February, and I would invite everyone to come over and have a look of the new place. We have put a lot of time and thought into it, and hopefully you will like it as much as I do. If you like our video, please making sure you subscribe, comment, and forward to your good friends. This is a weekly news highlight in a very quick capture, so you don't have to worry about reading all these long articles anymore. We'll get it ready for you every Saturday. With no further ado, let's go in and have a look what happened in Australian real estate, especially Sydney, around this week. So the first article is about property hot in Sydney's East in 2021 with vendor who leased early, reaping strong results. For those of you who have turned into the broadcast last year, you know that the eastern suburb has a momentum about buyer will pay whatever it takes to get the property over the line. And the problem always has been there's not enough stock. The property has never been a problem where there are just too many buyers or too many sellers and not enough buyers. After the house market boom at the end of last year, majority of the big houses has already been sold. We have achieved some amazing results. So now moving into the apartment market. So meanwhile, a property that was listed by McGrath in a semi-style garden apartment in Randwick has sold prior to auction. The auction was scheduled in February and was sold well above $2 million already, where the guide has only been 1.7, and that's just the beginning of the year. And also, in Dover Heights, there's private sales above $6 million already, which sort of pushing the market to continuous hot, from the end of last year. Keep going. There are other property that was listed on the 20th of December last year on realestate.com.au and has already attracted 520 email inquiries over the Christmas period, which means people has not stopped inquiry online. They have not stopped looking online. And then in the 1st of January, the agent has already issued 14 contracts already for one of the properties, and it's an apartment as well. So it looks like not just the house is getting a lot of attractions, the apartments are getting good attractions as well. And it's not any luxury apartment neither. It's just a 2-bedroom with 1 bathroom and a car space or garage. So it does have some good renovation, but from the look of it, there's nowhere near luxury or anything like that. Majority of the buyers now on the market are expats. For this particular agent, he said he has sold 91 properties last year, and 1 of the 5 sold to expats. So that's a very strong force that's pushing the market to the next level as well. Next one, this one is very interesting. Earlwood home filled with rubbish and junk set to go auction with no reserve price. Going to an auction with no reserve price can only show the confidence they have from the seller side in this market. And then, this is absolutely a place full of rubbish and garbages, and you can see the kitchen here just all over the place. The study or whatever that is, it just have boxes all over the different places. The backyard is the trash as well. They haven't even washed the glasses. Everything is all over the place. This is absolutely the most beautiful styling I have seen, in the career of my life. I look at this living room, it's just absolutely trashed. But these places, without styling, without anything, without reserve prices, are not, sometimes it may even surprise a lot of people. The last time, it was last year, and there was another property in Epping that was listed online for sale through auction with no reserve price. The price was started around $20, the auction, and then jumped to $1 million immediately after third bid, and sold for $1.871 million, well above the $1.5 million mark. Comparable homes have sold in this area. So even though the last year there was another property that has no reserve price on the market in Epping, it's still so well above the reserve price. So it looks like if you are in the strong market with or without reserve prices, it doesn't really matter. So let's have a look how much this place full of junk and garbage will get sold this year through the auction with no reserve price again. Next one, buyer want to avoid the dangerous herd mentality ahead of auctions. So this year is a continuation of last year's, high clearance rate. Majority of the weekly auction clearance rate towards the end of last year has over 80%. And then some of the suburb has record auction success rate even over 90%. That means, 9 out of 10 properties that was listed online through auction are actually, sold through auction. And that's just absolutely amazing. The last time we've seen this was actually year 2017. And 2017, today was no doubt the absolutely booming of the Australian, especially Sydney housing market. So, and then a lot of times in general, the auctions really doesn't really kick off until Australian Day, which is in a few days time. But this year, particularly, people has already started organizing auctions. This place in North Epping on Pioneer Street last weekend has attracted 15 bidders registered for the auction, and then eventually it sold to 1.68. And we just mentioned earlier, the comparables in the area is about 1.5 million. So this is $100,000 over the seller's already lofty reserve. In Randwick, again, like we just mentioned in the other article, $2.02 million this week. So it looks like this January starts earlier than any other January that in the history of Sydney auction history. Some of the areas with the highest clearance October, December are listed here, starting with Bassville at an amazing 95.8% clearance rate, and then followed by some areas that a lot of people are familiar, like Concord, Fairlight, Clovelly, and Narrabeen. All of them are 90% or very close to 90%, and it's just absolutely a signage of a good market at the moment, towards on which side you are, of course. Next one, 9 in 10 properties in Sydney sold for profit in 2020. There's no doubt that 2020 has been a good year for property. With the first tumbling first half year, a lot of people doesn't get it. A lot of people don't understand what's going on in this market. How much they're just confused. They're really confused. But towards the end of last year, I think a lot of people turn around and understand the actual real value of an asset in a very fast-paced changing world. So a lot of people start to jump into the market. Also, there's stimulus from the government. There are tax benefit. There are first home buyer benefit. There are home builder benefit. So a lot of these stimulus has come in, and the bank has dropped its rate. So that end up with 9 out of 10 properties in Sydney has sold for profit, which means majority of people have made money out of their sale processes. So they did sell more than what they originally purchased for, and they were just absolutely a crazy year. Across Sydney, the highest portion of loss-making sales were in Strathfield, Parramatta, and Ryde. Parramatta may have seen a particular demand shock due to the closure of international borders, obviously, but some other areas has really outperformed, compared to year 2018 or year 2019. Next one, it's a seller's market, but many homeowners have a limited capacity to capitalize. So a lot of people say, it's a good time to jump in the market. From my perspective, we have discussed last week, if you buy a lemon and try to change it into something else, or get a knockdown, rebuild, build a duplex and be in development and all that, it's a good idea or a bad idea. It really depends on your cash flow. So unfortunately, a lot of these places could have sold at a better price, but unfortunately, because the cash flow problem with the developer, they haven't been able to reach the potential price, which may be good for the purchaser, but unfortunately, it's just not good, for the developer or for the builder or for whoever that owns the place. If you are going to make money in Sydney market or any Australian market, buy, hold for long as possible, then sell is the ultimate strategy. It has never been changed, and it will never be changed again. And also as for development, cash flow, watch out. It's very important. If you're jumping the market without enough cash on hand, then at the end of the day, it'll probably, even though almost everyone made money in this real estate market, there are still potential lost if you couldn't keep the cash flow right. So, that's just a tip from this news. And then I think it should be always been what you need to be worried about. Investment does have its risk. There are no risk-free investments, but how you calculate it is really based on your potential gain, your cash flow, and don't overstretch yourself. Next one is the shortage of houses on the northern beaches and hungry buyers purchase price up. There's no doubt that the northern beaches has been a very popular area for local Australians. It doesn't have as many overseas purchasers, but for locals, it's absolutely a good place to live in. One of my favorite places is Manly, which is located in northern beaches. And then a lot of my friends had studied back in the days in DY as well. We have many other people that in my office that actually lived in those areas as well, like DY. At the end of 2019, northern beaches was not a very hot suburb, but when COVID hits, due to it's so close to the beach, it's so close to the shops, a lot of people are start jumping into that particular market. And also, even though there has been a lockdown in there at the end of last year, but overlooking at the figures and look at what happened in 2020 and look at what happening now as well, it is still a very hot area to bought into. All right, next one, 8th Street sales in Cremorne Neutral Bay Street breaks 2 years jolt. This is amazing sales all happening on the same street, Bennett Street, in sort of Neutral Bay, Cremorne border. And then, Lower North Shore has never been lack of purchasers. Last year, one of the most popular area in the entire Australia, especially New South Wales, are actually Mosman. There are over 200 houses that were sold in Mosman last year. Majority of them has been sold to, almost all of them sold to locals with some expat interest as well. So, this has not changed for the apartment market neither. So very soon, you can see there will be a strong interest in Lower North Shore apartment markets when the house prices had reached to a certain peak. Take this one for example, and number 44, Bennett Street, Unit 11 has sold for 1.05 million. Number 12 has sold for 1.2 million, both in June last year. And then 21/44, Bennett Street has sold for 1.55 million. 10/26, Bennett Street has sold for 1.325 million in July, and 7/26, Bennett Street, Cremorne has sold before auction for 1.125 million. So you can see a lot of these sales were happening between sort of 1 million to about 1.4, 1.3, 1.4 million. And then majority of them will be 2 bedrooms, in these particular cases. It doesn't have to have a very beautiful view, but it need to have a very cozy living style, and also taking advantage of the beautiful leafy areas of Neutral Bay and Cremorne, and also walkable distance to all the shops and really tasty and good restaurants. Our sponsor Plus agency has got listings in both Neutral Bay and Cremorne 2-bedroom starting from 1.1 million. And then if anyone's interested, please check them out. Last article that we're going to share today is the early start to auction campaign pays off for sellers in Upper North Shore as well. So we talk about Lower North Shore, we talk about eastern suburb. Now we go to the Upper North Shore. There's plenty of sale that happened in Upper North Shore last year, and a lot of this area had reached the unexpected price point. Like Taramara has got property that was over $10 million already. So this year, even at a very early stage, agents like McGrath, Marunga has already sold 3 properties in 24 hours. 2 of them was on the market for just 13 days, and the other was supposed to come to the market today. So overall, there are no shortages of buyers. The turnaround time in general for houses in Sydney would be about 30 days to about 40 days. But now looks like that time span has been shortened dramatically due to the high demand. And I believe a lot of these buyers was there on the market at the end of 2020 already. They just couldn't find the place. So as soon this year opens, before it jump into even hotter February and March, by the look of it now, it probably will happen. They just start really pushing themselves into the position of ready to buy. It's definitely worth coming back early because in general, January was still gonna be a very quiet month in terms of auctions or purchases or anything like that. So I think that pretty much wraps up for the news articles for this week. For those of you who are interested in getting knowledges really compressed and understand what happened in Sydney within a week time, please tune into our channel. I'm Peter, and thank you for our sponsor, Plus Agency. I'll see you next week. Bye.